2021 has been a transformational year for Wereldhave. We used to be a specialist focused on shopping centers, but as part of our new Life Central strategy that we launched in February 2020, we are now turning those shopping centers into full-service centers. Full-service centers are a place where we combine efficiency, experience and service, which leads to a better business for our tenants, but also to a better everyday life for our consumers. As part of that strategy, it was very encouraging to see that in 2021 we received the first evidence that the strategy is working, both from a leasing but also from a customer satisfaction perspective. Despite COVID-19, we had a successful year from an occupier perspective. Our occupancy rate increased to over 96%, which I think is a very strong performance in a year impacted by COVID. Thanks to this high occupancy rate and also thanks to a high rent collection, we managed to end with a direct result per share of €1.88, above our latest guidance provided in Q3. Because of this direct result per share of €1.88, combined with a strong balance sheet, we're now in a position to propose a dividend of €1.10 per share for our shareholders. This is remarkably higher than the 50 cents per share that we paid in 2020. And I can also mention that as of 2022, we will return to our normal dividend payout policy of 75 to 85% of the direct result per share. Last but not least, from a financial perspective, the property valuations stabilized in the second half of 2021. And this is important to mention because over the last couple of years we have seen significant write-downs on the value of our investment portfolio, driven by the development in the retail market, but also driven by COVID-19. And again, it is important to notice that after a couple of years of decline, property valuations are now stabilizing. From a leasing perspective, 2021 was quite a successful year for Wereldhave. We signed many new leases, amongst others, with operators in the F&B and healthcare industries. To be mentioned here is a large package deal that we signed with F&B operator Albron in the Netherlands for 7 new locations in our portfolio. In 2021, of course, our visitor numbers were impacted by COVID-19. But it is encouraging to see that when the lockdowns ended, our visitor numbers returned pretty quickly to what we call a normal level. From an NPS perspective, the Net Promoter Score, we noticed that in 2021 the NPS went up significantly. This was driven mostly by the launch of new concepts, such as The Point, Connect and Up Next. Thanks to the disposals we made in 2021, 3 assets in the Netherlands and 4 in France, we're now in a position where our balance sheet is strong and our liquidity is secured. In addition to that, thanks to these disposals, we can now kickstart many of the transformation projects in the company. We realized that the disposal we made in France of the 4 assets that we announced during the summer of 2021 was a very difficult decision. However, mostly thanks to that disposal, our balance sheet is now in a strong position, and in addition, our liquidity as well. Next to that, we will make sure that we will sell the last 2 assets in France at the right price. We are looking forward towards 2022 with confidence. We've delivered the first 2 of our full service centers and we will deliver another 3 of them this year. In addition to that, we can mention that the performance of these first 2 full service centers has been relatively strong compared to the rest of the portfolio, particularly from both a leasing as well as a total return perspective. From an earnings perspective, this year will be the last year of earnings decline. As of next year, we will see 4 to 6% annual growth in both earnings as well as the dividend. We can now confidently say that the financial restructuring is behind us. And this means we can kickstart many of our transformation projects. Our strategy is beginning to bear fruit and it's only just begun.